Hi folks, Vic here with your weekly trade video for Friday already, Friday, August the 23rd, 2024. First of all, be sure to register for our webinar on August the 27th, next Tuesday. There's a link and more information in the text below this video or in the email that you received. In last week's video, Darko went over the methodology for finding a high odds short-term trading opportunity, and there's a link to that video at the end of this video. In this week's video, I'm going to show you just how powerful these setups can be when you develop the necessary skills. Okay? Hope you liked the video. And yeah, please do hit the like button if you do. That really helps our channel. Much appreciated. Alrighty, here is Darko to talk about 3 different day trading setups.
Kiwi CAD. Oh, sorry. That was my alarm. So the monthly chart is dead. High lows, lower highs. Yeah, sure, this is higher than this one. My overall bias is long. Okay. This is a bullish ACAT. It's also engulfing at a level of support. The level of support is down in here. Okay, we reacted perfectly from that level. I'm marking this level right now for my entry. So yeah, this is a long-term pending order for the long-term service. We can make this into a pending order for the short-term as well. So yeah, this is a pending order for the reason I just mentioned. Same goes for Kiwi Swissy. So yeah, Kiwi Swissy is also a pending order. The trend is down. Okay, monthly, weekly, daily. Okay, we have a double neckline, swing necklines. We also have a super strong monthly level, and we have a natural stop that I'm okay with. So yeah, this is also a pending order. If this fails for whatever reason, you have a very juicy, strong, identical neckline above. This is an option number 2 entry. This is an option number 1 entry. Kiwi dollar, another pending order. Monthly is that, and obviously all the pending orders are hands-on unless I say hands-off. So if I don't say anything, it's hands-on. Okay. Monthly is dead. Okay. My bias is long because I've seen stuff in a yearly chart, and that coincides with my bias. We are also at we go back to when there is no monthly trend. What do? Step number 2 is pure price action trading. This level makes super sense. I have a weekly ACAT at a level that makes sense to me. Okay, and these necklines are also a daily neckline. We breached and closed deep enough to use as a natural stop, then we convincingly re-establish background space. Do it. Pending order.
Okay, let's take a look and see how these trades turned out. And listen, yes, this is all hindsight. Absolutely it is. Why I'm showing this, I want you to see the power behind short-term trades the way that Darko is going to show you if you do them right, if you follow the rules. Okay, so New Zealand CAD, that trade, what he did, that entry was down here at this point right here. Now this is on the that was on the beginning of August, 4th of August, and at that time Darko had pointed out this very good level. If you look in the upper right screen here where my cursor is, he had pointed out this level here, and then on the daily chart, if you bring this up here, you see that support, and then it was resistance in here, and then it broke it and became support. And then so the trade that he had on was the one on the 1-hour chart, entry time frame for day trading. It's different for other kinds of trading, but for day trading, the entry time frame is the hourly chart. That was the enter, the 62%. That's the way he prefers to get into these in a case like this with a low stop loss. This needed about a 75 pip risk, and it moved up about 200 pips. So pretty darn nice. And I think it was a little over 2.5 to 1 reward risk. Okay, so that was that one. And by the way, this level up here, why do you pick this one? Why not something else? Yeah, you could take other levels. Like here's a Fibonacci extension. You can look at other levels. What you want to look at is logical levels where you have really good, especially identical necklines of weekly and daily. Okay, so in this case, see the weekly level here? That's a very good level right here. This candle action here is quite strong to the downside. Excuse me. And then on the daily chart, that same line is right here. Well, that's pretty obvious. That's a good place. And look what's happened to price. Okay, this happens over and over again when you learn to read price properly. New Zealand Swiss. This trade was what we call an option 1 entry. There's a tutorial on how we do that. This one here, he had this weekly level mark. You see in my upper right, that's a weekly chart. Look at that. That's a great level. So what happened to it? Well, it was also a daily level. Let me just show you the daily chart. Daily level right here. And you saw price had gone way down here, and he said if it comes back up here, sell it up here. Option 1 entry. And in option 1, we just sell it right here. He was happy with a stop above here. That needed about a 55 pip stop. And then it moved down quite nicely. It moved down more than 55 pips. And when you get up greater than 1-to-1, do not lose money on trades, okay? And especially when you're learning. Nothing wrong with taking the profit at 1-to-1. If that's you're comfortable, then hang on to the other one and go for lower prices for a bigger profit. But you don't lose money. That's part of risk management, and good thing, because you can see what happened. It's since then it's kind of chopped its way higher. And finally, we had the New Zealand US dollar. And again, what a level. Upper right corner. This is the weekly chart, okay? Right here. Beautiful level. On the daily chart, lower left. Here, let me just bring this up. I got these things in the way. There you go. What a nice level that is. That's been hit several times. And so if you go to your 1 hour chart entry time frame, that entry was right here. I meant to make a circle where that was, but it's right where my cursor is. That was the entry right here. It needed a risk of like around 60 pips, something like that. This move up to here, and I'll show you that level in a minute. That was about 240 pips. That's a 4-to-1 reward risk. I'm not saying you're going to get all that. It's going to depend on your trade management, but there's levels here. There's a level here. These are Fibonacci extensions. If we go to our chart, remember I said look for areas of confluence between the weekly and the daily. See, look at this weekly level. Like, that's a sweet level. Pretty hard to deny that. That's covered there for a long time and plummeted from there. If you go to the daily chart, this is the same level right there. That's a pretty good move. That was 240 pips from the entry. So another really good move up, and like I say, about a 4-to-1 reward risk on that one. So let me say again, at the risk of sounding like a broken record, the point of me showing you these trades is that Darko is using the exact identical price action reading analysis for the short-term trading as he does for his very successful longer-term trading. Okay? And this is the kind of analysis you can look forward to as a member of our short-term trading service when Darko takes it over at the beginning of September. So there you go. And just so you know, this kind of analysis can be used for any trading style from micro scalping right on up. And when you do an analysis like this in a consistent and objective manner, what it does is it helps you avoid over trading and taking iffy trades, and you only take the ones that conform to the rules, right? You do not need to be trading a lot to do well. And in fact, it's the opposite. It's far better, just think about this, far better and easier on your psychology if you only take a few good trades each month and make money than to take dozens of iffy trades and lose money and be exhausted and disillusioned at the end of the month. Okay, hope that makes sense. So thanks again. Hope you liked the video, and if so, please don't forget to hit the like button, and also be sure to register for the webinar next Tuesday, August the 27th. Hope you guys all have a great weekend and week ahead. Take care.